Hello guys. I hope Lishapo and yeah. So this is going to be our second chat today. Actually, on Sundays I always give you few charts that you can just monitor and take advantage of throughout the week. So the first one was US 30, and then the second one is gonna be VIX 75. So if you are new here, make sure that every Sunday you come to the channel and just check, look out for new videos because this is where I share market analysis even on this one because I see the structure currently is very interesting. So make sure that you sit there and let me show you the simplest way to go around about assessing and analyzing VIX 75. So let's get started. Don't forget to like and subscribe there, and for those ones that are in the mentorship, your first lesson is tomorrow. So if you're interested, you'll just let me know, guys. So let's get started. So this is our second chart. So we always start with the highest time frame just so that we have a bigger picture, just to see what's happening on the bigger picture, so that we don't want to go against that. So here what we can see is that I hope those ones that have been here for a while now, you remember this trend line. We said that on this time frame, this is our trend line and this is our support. So we have got our bullish trend line and we will support area. Both of them, the price is around there, so the price is hitting both of them. So the thing that you need to note here, take note of, is that remember the price was coming here for the first time, where we were talking about the trades to the upside and saying that it has to go to the at least to the opposite structure, which is our resistance there, and it did that. So the problem now is that even though we are still inside that support, we are still around that bullish trend line on monthly. The problem is that the price, it came here, it pushed up there, it's coming again. Yes, we understand we didn't have a candlestick away, but the way it's playing around here, it's not good for the bulls to do this and then for the bears to come back again like that. So that's what we are worried about. But we will see when we are moving down to the smaller time frames on like what do we find that said. But it doesn't change the fact that our support is still holding and our trend line is still holding. So let's move down to smaller time frames so that we can see if we can't get any trades that side. So meaning, if let's say you are on at the time when the price was still coming down like that, you could take your trades to the downside. But now, because you're inside this support, you can't take a trade to the downside and say I'm going to hold it for days or weeks or months because of where you are, you see. So rather, if you want to take a trade to the downside, make sure that this one is taken out first. Then you won't have that resistance. Then you can be that area support. You can now target the next one. But now, if you're inside it like this, trying to take trades to the downside, it's not a good thing to do, especially if you're planning to hold them for a while, for days or weeks. So let's check our weekly. So that's all that we have here. We can see that now we are inside the support. We still have, we've got more room to go up than to go to the downside, judging from where we are. So let's check our weekly. Our weekly is where it gets interesting, because remember, when it was coming down, I showed you when it was coming down for the first time on monthly, right? And there it got rejected like that. You can see this. That's when it went up. Now it's coming for the second time. It's just that on monthly, because it's a bigger time frame, you can't see it playing away from it, but you could see the candlestick of the price moving away. This white candlestick is the price coming in, and then it went up, but now we are coming again. So during that white candlestick, this is what we had on weekly. We had this. This is when the price moved up. So when the price was coming back, because this was our nice area of what? Area of support, that during its time when it was formed, right? It gave us this strong move up, and that move broke the trend line that we had, which was here. It was a very strong area of support, and the price has never tested it before, which is why when the price was coming back to it here, and we knew that it is inside the monthly area of support and it is around the monthly bullish trend line, which is where we said you could take trades to the upside, and the price went up. But the challenging thing now is that when it went up, it didn't take out the highs here. It didn't give us the higher highs, so it was more like just a pullback. Now it came for the second time. When it's coming for the second time here, we know that it is still inside the same level that we had, but now the difference is that the level is not fresh anymore, meaning it has been hit before. So because of that, you need to be careful when you are searching for trades to go up, because you would find that sometimes when the price was here, it collected the orders. Now you don't have the buy orders to be filled, and then the price will just go past that point. But we don't know, we don't predict such. It will all depend on what the price is giving us from right where it is. So, and another thing, what the price did when it came back, because remember it went up and then it came back again. When it came back, it went lower than this. It went lower than the last time it turned here. Now it went lower than it, which means the sellers could be very, very dangerous in this zone. They could be, trying to challenge this zone and take it out. But now it is still not yet convincing, because of what you can see that yes, they went. Just want to make sure it's straight. They went lower than that, but they are failing to close outside. It was more like they just shot the level, but they ended up closing above. You see? So this is also not good for them. Because this could be your bullish rejection candlestick on weekly, which is at the weekly support, and it is inside the monthly support. There's also a monthly bullish trend line. So this could end up being a push to the upside. It could be like initiating a move for the buyers to continue to the upside. But now the challenging part is that yes, we did have this, but we are struggling to go above it. You see? So it's not yet like a good thing. We know we are inside the support areas. We've got more space to go up than to go down, which is why we're trying to find trades to go up, because even this is saying that the sellers, yes, they try to go lower, but they are failing to close that on that side, unless if they're going to come back now and take it out completely. But until that happens, we are not going to give them full credit. So, and again, because of this lower low that we had here, we had a lower low here. It means now, because at some point your trend line was here, but because now we passed this point, we went lower than it, you have to update that trend line. You can put it like that. That's your bearish trend line on weekly, and this is your area of resistance. And as always, you need to know where your support is at and where your resistance is at. The support is still, you can still keep it the same, and you can have your trend line there and then your resistance. So this is your weekly resistance and this is your weekly support. The price is inside your weekly support and it still has enough room to go to the resistance, which is why if you were to get trades to go up, it's just that the bullish rejection candlestick that we're having now, it alone cannot give us a trade. But we need to make sure that when we are scaling down towards H4, H1, checking for trades, if we get something to go up, at least you know that, and on weekly you had something that could end up being, the initial point, and it can end up being a swing low, and the price can push up towards, the trend line. Either when you are getting a trade to go long, you're either gonna remember you're always targeting the next opposite structure. The structure can be a trend line or it can be a zone. Whichever one is hit first, that's where you're going to exit. So meaning if you're to get trades here on your smaller time frames and you are holding them, they are moving up nicely. Once you hit this trend line, because it's active, this is a trend line, you need to make sure that you exit. So it will all depend on what we are finding here when we are moving to the smaller time frames. But we need to make sure that as you are moving down, what you need to take with you is that you are at the monthly. From the monthly chart, we are taking it that we are at the support and we are at the bullish trend line. That's what you need to take with you when you're moving down to your smaller time frames. And on the weekly, we need to take that we are at the weekly support. And what else? We have a weekly pin bar. Which is a bullish one. So, but the negative thing is that we had a lower low. But the lower low is not very so convincing because of what? The price didn't close below. It did break the level, but it didn't close below, and it didn't take out the zone, which is what we can say that it's more of the buyers than the sellers that seem to be winning here when you put all of that together. So let's check what we have on on our daily chart. This is how our daily chart looks like, good people. So on daily, yes, you can see that we did close below. So now what do we do? Let's just bring a horizontal line so that you can see. I want to make sure that you guys follow throughout, so that until we make a decision on what seems to be a better thing or higher probability setup or higher probability option for us to take. Here we had what? Close below, right? I want you to see this. Yes, here the market closed below, right? But after closing below, what did it do? We had what we call bullish engulfing. And this bullish engulfing is still around this. We understand we took it out, but it's still around that. So they closed below, but now they are allowing the bulls to still come in and swallow all the price action from their previous day. That's when you had the engulfing. But the engulfing resulted in a move that went up. It went up, and the highest it reached was that. Now, during that point, you need to ask yourself, during the time when the bulls were engulfing and going up there, what did they achieve? What did they achieve? Did they break any trend line? Did they break any area of resistance? For us to say, it seems like they allowed them to close outside, but they are still trying to defend. In this case, we just had the engulfing. We went up like that, but we never took out anything, which is what it's scary because of what? On this time frame, your nearest area of resistance is around here. This is your daily resistance, and then your daily support. You can just look back. It's not so important right now. So the daily support, you can take this one. This is the daily support. This is the daily resistance. So because of us having the engulfing alone, but it's not taking out anything, and the trend line, you can still keep it there even on this one. So because of that, we can end up seeing the sellers pushing down to this. So but we will see. So let's see. And anything else that we can take from this is that look at the type of candlesticks that we are having. Yes, we did have like this ones. If this closes like this, it's not a good sign. It's not looking good for the buyers. We spent about a week here, so we've been moving to the side for about a week. But look at the type of candlesticks we are having. It will mean now we are having two bearish rejection candlesticks. So the buyers are trying to push up. Yes, they had that engulfing, but they are failing to continue with that momentum. The momentum of that candlestick that engulfed the previous candlestick was very strong. Only if the buyers could have continued with that until this maybe take it out, then yes, when it's coming back, you can just, if you did this, I hope you can see what I'm trying to do. If let's say they engulfed like this but continued like that, take that one out. When they're coming back, you can give them a chance and hope that they will defend that area and go up. But in this case, they just gave you the engulfing, but that engulfing didn't do anything. After the engulfing, we just moved around the same area, and currently we are having these ones that are showing sort of weakness. The bulls are showing weakness because you can see the tails above, which means the bulls are trying to push up, but they have been pushed back down. Trying to push up, being pushed back down. So that's what you need to take with you when you're going down to H4. So let's see what's happening on H4. What do we have here? On H4, this is what was happening. On H4, when the price was moving down during the engulfing, this was the engulfing, this price action here. This is what gave us the engulfing. So what happened was that, remember, each time frame can have its own price action. It can have its own trend. It can have its own trend lines and stuff. So when it was moving down, this was our trend line, right? So this being the trend line means this was the nearest area, or the imbalance, the nearest area of what? Of resistance. So let's just put a horizontal line just to see who broke this resistance. Somewhere here. It's not, yeah, somewhere there. So I'm not sure if you guys can see that, but this went higher than it, which means the move that started from here, it's the one that broke the area of resistance. And that move or that point, that very same point, is the one that broke the trend line, because the trend line was broken by the move from this. So meaning this point, it let's mark it so that When I explain, you can understand. Because it's a pin bar alone, you can throw it like this. So this being the point that broke the trend line, and it also broke the resistance, it means it's very strong. So during this time, you could say that your H4 was sort of bullish. If you're trading H4, you could, when the price came back to it, you could take this, and then it came for the second time, but it was no longer fresh. And another negative thing is that when it was moving up, it gave you a trend line like that, right? So what it did was that it came back to the trend line, but it didn't give you anything. Look at how it's approaching your trend line. It's giving you a bearish rejection candlestick, which is why I'm saying when you have like a support area of support, we prefer getting like a candlestick that's gonna be aligned with the support, not the one that's gonna be the opposite, because then it means the opposite guys, the guys that are pushing against them, you might end up winning there. The same thing that like what we're having on daily, where you're having those two rejection candlesticks that are pointing down, and you're trying to buy because you're around the support. But because of what those guys are doing, it could be a sign that they are going to push past that point. You see? So what happened was that from this point, when we had the trend line, we came to the trend line was defeated, we went down, we took the support as well. So from there, you could say this is your nearest area of what? This is your nearest area of resistance that broke the trend line and the support. The price went back to it. Look at this. The price went back to it. It got rejected until this point. But from there, the buyers came back in. So if you had taken this one, this was more than enough for you to do what? To move to break even. It's still moving around. The level is taken out. And that level was very strong. It's taken out by what? It was taken out by a move from around there. Because this is, let me just remove this so that you can follow. Let's remove this. Let's remove this. Right? We said this was the area of resistance that gave us this move and broke the trend line and broke area of support, right? So meaning this is strong because of what it did. And during that time when you broke the trend line and the support, you became bearish. And when you became bearish, it means you could, search for trades to go short. But when you're searching for trades, you need to know where exactly you're going to search for those trades. Then you could say maybe this is the nearest what? Area of resistance, because that's, if you are trying to join the sellers, you can join them at the bearish trend line, or you can join them from area of resistance. In this case, you hit the resistance, you got rejected until this point. But you failed to go and give you a lower low than this, which means you failed to have a trend line for that bearishness and continue like that. So that's where the bulls came back in. And then look what they did. They came back, but now your level is no longer fresh. They came back, they defeated the level. You ask yourself, who broke that level? It was the move from this point. That became your nearest area. It got tested, we went up. Now we are coming back to the same level, but the point is, it is not fresh. And we are also worried about those two bearish rejection candlesticks on what? On daily. These ones. We are worried about these guys because they might just end up pushing the price to the downside. But this looks very nice. It looks like proper. It's proper because you do have a higher high. You can have this as your trend line. You can have this. You can put your trend line here and then have this as your support. Now this is your H4 support, and then where can you put your resistance? Even if you put it there, just to say this is the point that I'm targeting, and this is my support, this is my trend line. So depending on what you're gonna find here, it's up to you whether you're gonna try and catch that and hope that you'll catch it. But when you do, make sure that you don't like, you are being realistic. You can't take a trade there and then you say you're gonna target something like that, because currently this is like a long-term prediction, but long-term or the higher time frames, they are not showing us, they are not convincing us about this strong move to the upside. So meaning, if you were to catch a trade from the current price action, make sure that you exit around there, because no one knows what's going to happen. But again, you need to be careful with how you search for your trade around this, around the same point, simply because this area has been tested many times. Even if you draw it from here, It has been hit many prices played here many times. And remember, the more a zone is hit, the more an area is hit, the weaker it gets. So you'll find that the buying orders from this level have been all consumed. So meaning, because you don't have the buy orders anymore, the price might end up taking this out. And if it takes them out, it means it agrees with what you saw on daily, which is why I'm saying this here that you're trying to do here can be very dangerous. So you need to be very careful. You can leave it and say, let me wait until this clears out, because that can be very dangerous. Because of what? The zone, the price has been playing there for far too long, guys. It has been playing there for far too long. And your buyers, remember, they are not going anywhere. They are not doing anything. They just did the engulfing, but from there they just played to the side. So this could be, it could end up being what? The sellers were moving down strongly. They could pause and then continue with their rally to the downside. I mean, with their drop to the downside. You see? So this is not good. This is not good. We want you to come down, and then if you want to turn, just continue to turn like that. Don't waste time here, because this can end up being a new camp for the sellers, with just like a sideways move and then continue to the downside. And especially because of what we are seeing here when you're talking about this type of candlesticks that you're having there. So you need to be careful. This might end up just being swallowed and go all the way down. So buying from that point, if you decide to take a buy from this point here, this point, yes, I understand you have a trend line, but need to be very careful. If you decide to take it from there, you need to be very careful, because things might just go south. Yeah, bon. So let's just check what else can we do. Let's do H1. Let's see what H1 looks like. So on H1 we are having more or less the same structure. So you can have this as your trend line and this as your zone, right? And you can see that things are not looking good, guys. This thing has been hit many times. We are not saying it should be broken because it has been hit many times. We are just saying it is no longer strong, which is why even when you're trying to have like the balls of a steel to say you can trust it, you can take your chances there, you need to be careful and make sure that you don't over risk. This is not a zone where you can, take many trades. You can take your chances there and then with like a small lot just to see what happens, but you need to wait for confirmation. If you get confirmation, you still can't go all in because of where you are, what the other time frames are doing. So it all depends on you guys if you want to catch it from here, or if you let's say you wait for the price to do this and take out the zone and take out the trend line, then it means you can maybe get a pullback and hope that you can catch that pullback towards the next area, which is your support around there. So it's up to you, but this is how you read the structure. This is how you're supposed to say, to come to a conclusion, to say, based on what I saw on this time frame and the other time frames, I think the best thing to do is to go like this. You see? So that's all that I have for you guys. So I don't see any opportunities right now, but because of where you are, yes, I won't disagree with you saying this is a zone, there is your bullish trend line, and then you are trying to get trades to go up. You can do that, but for me it's very risky. It's very risky. Price might end up coming to this area here, and this is fresh, way better than the current one, because the current one, the price here have been playing there for a very long time. All right, I think I will leave it like that. It's up to you. The decision at the current price, it's up to you guys. But if should the structure change, maybe on Tuesday, I will make another video and update you and see if the structure won't look different then, and if we can't get trades. All right, guys, I think this is going to be the last chart, and then maybe I'll make another video tomorrow. Don't forget to like the video and subscribe as well. And then if you're interested in the mentorship, you will text me on Telegram 9590383. Then we will take it from there, where I can show you all these skills as to like how you where to start Exactly. I'll give you all the tips from the basics until to a point where you can open the chart and do a thorough top-down analysis, so that once you have looked at all the time frames that you're trading, then you can say, therefore, based on all that I'm seeing on these time frames, I think the best thing to do currently is either to wait, because waiting is also a trading decision. It's not always about saying when you're making a decision you must say buy or sell. Even waiting could be a decision where you say, currently based on the structure, the best thing to do is to wait. Maybe wait for a day or wait for a couple of hours so that you get more new candlesticks. Maybe those candlesticks will change the structure a bit. Then you get your trade opportunity, because it's not always about jumping in. It's not always a good time for you to trade. Sometimes you just wait. Patience, 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 and let the price get to a point where you want it to be, and then you can take it from there. Because should you say, let's say, for instance, let's say you do your analysis and then conclusion is that the best area for you to take a buy is this. Currently, the price is there. You don't have to try and find a sell to come here to accompany the price there. No, because you'll never know how the price is going to get there. It might do this before getting there. So, which is why you must just wait at your station. Wait here for it to come back here. What it does in between, you don't have to stretch much about that one. Just wait at your zone. Patience. In the meantime, go check something else while here you are waiting. That's what you should do. All right, guys. I'll see you in the next video. Sharp, sharp.